Hey guys, welcome to the Trade Genius podcast. Bob and Phil here as usual. And guys, their plan is working to a T. We all need to wake up to it. We're going to talk about it in this video. Let's dive in.
Trade Genius.
Hey everybody, Bob, Trade Genius here. Peace, love, and Trade Genius. Spring into some savings with us right now. We got some great specials running. Market is in unprecedented areas right now. We think we got a good handle on it. Go to tradelikeagenius.com. Take advantage of our spring specials. Thanks for listening. See you later. Hey, Phil, you ever wonder why Congress people don't care about what you have to say, and why CEOs don't care what you have to say, and why celebrities don't care what you have to say? Let me throw this chart up and I'll show you why. Because they already own us.
Wow.
This is the distribution of household wealth. Here's the one that'll blow you away, is that average wealth in the United States is, I could be wrong, I'm doing it from memory, either 1.1 million or 1.9 million. But the median net worth in the country is $190,000. And then you just shared with me before we got on the show that there's only 7 million millionaires as defined by net worth in the country. And you can just see that we're just going down a path of potential destruction.
Mm-hmm.
And the reason why I wanted to show you this chart was because we're trying to figure out what analogy is most apt for us. And I'm slowly sliding off the 70s analogy into the 1920s analogies, especially when I started seeing some of the farms starting to go bankrupt. That happened in the 20s as well.
Yep.
And also you start to see the collapse of world trade. That also happened in the 20s. And so we may be setting ourselves up for, not a 40% correction when this thing happened, but maybe almost like a total reset, like what happened in the 30s, lose 80% of the value of your assets over a 4-year period of time.
Right.
And if people said the same things they're saying now, up until almost the week of the market crash in 1929, it was party on, Garth, and it was new level. I think what they said, we reached a new higher plateau of living standard or something like that in the country, and we'll never see another sell-off. Because remember, they had a depression in 1920, 1921, and they think the Federal Reserve fixed it, and all they did was cause a worse problem. And I think we're setting ourselves up for the same thing.
Yeah, and the other thing that kind of rhymes with the late 1920s going before the Great Depression was the fact that there was the highest amount of concentration in a few select stocks too. So it really does start to rhyme with that. And, again, I think when we get into these situations, it's like you're squeezing the last of the blood out of the turnip. And so here we are. And I'm still looking for reasons why we may not have this like blow off top and then a collapse. And I just can't find anything because all of the macro data under the hood is starting to align now. And I'm talking about stuff that wasn't really in play last year, even in the last 12 months. Now the data points are really starting to converge. So yeah, I got to be really careful as we progress in the second half of the year. And like you said, it's great until it's not. And this situation here, typically how it plays out, it turns on a dime.
Yeah, it's interesting. And, I think one thing that you and I have learned here, and, for people listening to us, is that because you don't trade, most of you guys don't trade with us, so you don't kind of know what we do day to day. But we're macro bearish, and we know people, it takes like 21 impressions to get somebody to believe something that is true, because of the trust factor. So we've been banging the drum on this thing. You got to slowly position yourself to this. If you're lucky enough and you've been grabbing this run up higher, you better be in position to go to cash and kill debt, because I'm more and more convinced now, Phil, this AI revolution is real. Not necessarily the stocks are going to be, mad up forever, but the technology is such that we're seeing some of our customers, whole departments that they work in, just getting wiped out in one go. And the robotics revolution, ultimately this inflationary impulse is going to cause a deflationary, I hate to use the word collapse, but a deflationary period, because companies now, when you get nervous as a company owner or the business owner, you look to see what variable costs can I take out of the business before I have to really, cut into the meat. And you're seeing it in the software as a service. Look what happened to Snowflake on their last earnings. People are starting to now, they're going to start grinding on everybody that has a repetitive business model to cut their costs. If you don't have a sunk cost and you're running a business, you're going to be asked to participate in the cost cutting of your customers. And I think this whole thing is just slowly until we Jenga. But the economy for sure is in big trouble. And we see it just, you and I doing these podcasts, we couldn't do 2 years ago what we could do together, you and I. We would need help or more people or higher costs. Mm-hmm. Same with Trade Genius. If we didn't have some of the technology that we have today, we'd have to hire more people or the business wouldn't even be viable. And so it's really interesting. I think, as you always say, I think this fire that we're going to have, I think the phoenix coming out of it is going to be pretty compelling because we have to wipe out these legacy costs that are embedded in the system for new people to come around. And I'll give you one last thing as I'm rambling on here. I grew up in Allentown, Pennsylvania. Iconic skyscraper in Allentown is the PP&L building. You can see it from 30 miles away when you come into the valley, Lehigh Valley from the west. You can't miss it. That and the Bethlehem Star. And they just sold it for $20 a square foot. This is a 25-story structure, Phil, that takes up like a city block in downtown Allentown. And they just sold the entire building, or it's on the market, I should say, for $20 a square foot. I mean, that is absolutely insane. And I think in New York, they sold one for $1 plus assumption of debt. I just don't understand how they're keeping this stuff off the books of these banks. It must be all hidden in pension funds, Phil. That's the only thing I can think of. I'd like to get your thoughts on that because this is different than 08. In 08, maybe the banks were stuck with all this stuff. They did a good job of shoving all this risk over to other players. And I just can't imagine when you're trying to liquidate your realty fund that you're participating in, they tell you you're stuck with it for the next 10 years or we'll give you 30 cents on the dollar. It's going to wipe out a lot of wealthy people too.
Well, the pensions is an interesting thing because they cannot fail, right? Like we cannot have our pension funds fail, and especially like the powers or the people that are in power are of that generation right now. So what do you think they're going to do? They're not going to let that stuff fail, So I think I think that's why we're going to see additional QE and we're not going to go into a prolonged, eventually there's going to be a bigger collapse because every time we kick the can down the road, right? But the pension funds are going to be the next thing that we got to save the pension funds. And so there's going to be another round of QE. And that's why I'm a firm believer that 2% inflation is just a pipe dream now because it's going to be more like 3 and 4% inflation. And so my thesis and my philosophy is like you have to hedge with inflation. But one of the best things to do that is something that's hard and scarce. That would be Bitcoin. And there's a lot of people that don't get Bitcoin. But, like you were saying, it's like all the benefits of gold, but better in terms of, an investment in your portfolio. So that's where I think it's all headed. And I think we're just going to be repeating ourselves. But I think they are going to let this go a little bit just to try to get some deflation to try to combat that inflationary outcome that we're currently fighting. But ultimately, at the end of the day, they're just buying a little bit more time. And we're going to be dealing with this again. And maybe it's going to be a faster cycle where instead of, they kicked this down the road for about 13 years. Maybe the next time it's only going to be about 5 years where we're dealing with this again. But if we go through this recession and they do come in and do another round of QE, I do agree that the AI and all that stuff that we have now, our productivity is going to be better. And I do think there's going to be a pretty good boost. And it might even seem like things are doing okay, which was the case in the mid-teens, right? After 2013, things started to pick back up and look pretty decent. But again, the way this works is nothing really changes under the sun. We're going to be in the same situation that we are now where things are stalling and we're going to be concentrating. Maybe we'll only have a mag half. We won't have a mag 7. We'll be down to a mag 0.5 and this distribution of wealth is going to be even greater then. So all I could say is use AI to your advantage. Have it think up of a business plan for you, find a niche, do something because there's you brought up an interesting point too, Bob. You said maybe the next billionaire would be a one-man show where literally he's just got a AI team and really he's the only guy needed. And I think that could be like the new gig economy really. So I think there's a lot of things to look forward to, but you kind of have to understand the grand scheme of how this is all going to play out. It just may not, when everybody gets scared about the great collapse, that might not happen until maybe the end or after 2030. They can buy a little bit more time for another cycle perhaps.
Yeah, well, remember the Great Depression, 75% of the people still worked. So it was a Great Depression for the 25% of the people. So, you have to put all that stuff in perspective. And the other thing too, Phil, is we're going to talk gold on Monday because gold's going to participate in this next move. So it's really interesting is that, we just like the charts and some interesting things happened on Thursday and Friday with some of the gold miners. So I went ahead and did some work on that. So we're going to talk about that on Monday and it might be time to scale in. Silver is actually doing a little bit better than gold. And so there's a potential here for a really nice move. We'll show you the charts. We'll show you the numbers. You can draw your own conclusions, but it might be time to start allocating into that area. And then, like you said, when gold and Bitcoin start going together, be happy and be scared scared at the same time.
Yeah. All right, guys. Well, let us know what you think on this conversation today. As always, we appreciate your views. Please post your comments below. Bob, thanks. And we will see you guys on the next episode. And if you're interested in the stuff that we have to offer, check out tradegenius.co. We've got indicators, we've got courses, we've got all kinds of things. We can get you into the room with us if you're interested in learning how to navigate these markets, because it will be a wild year. Make no mistake. All right, guys. We'll see you on the next episode. Take care.
Trade Genius.